So in Africa, only 4% of people own cars, own vehicles.
And the way there are so many traffic jams.
Yes. One Tesla could make 55 electric bicycles. So in January and February, we did more deliveries than the whole of last year. In March, we did more deliveries than those two combined. And in April, we grew by, I think, 50%. And in May, we did more deliveries and revenue than the whole of Q1 combined. So
there's clear product market fit.
Yes.
Yeah. Hi everyone, welcome to the Startup Evangelist Ideas for Africa. I'm your host, Daniel Kitwa. This is episode 16 on video, episode 17 on audio. We encourage you to keep liking, subscribing, and sharing our content. And thanks a lot for those who have supported us this far. I'm joined with Mr. Jorgs Mbugua. He's a founder of Ebikes Africa, an EV company based out of Nairobi and expanding rapidly across East Africa. Karibu, Jorgs.
Thank you very much.
Yeah, so maybe to start us off, I know we are going to talk about what you're doing with Ebikes Africa, your business model, the opportunities you're seeing and trends. But maybe, a brief about yourself, prior Ebikes, who is Jorgs? What have you been up to? Your journey basically as an individual and as a professional.
Okay. So the name is Jorgs Mbugua. And I was born in Mombasa, moved to Nairobi in my mid-childhood. And I've been an entrepreneur ever as far back as I can remember. So my entrepreneurial journey comes from my love for humanity. I try and solve problems for people and to increase the quality of their lives. So all through my primary school, high school, university, I've always been solving problems and increasing quality of life for people around me.
So what would you say would be what was your first business, if you could remember?
My first business was selling Royco and juice cola in primary school. The food was very bland. I went to a really tough public school. And I was buying Royco at 50 cents and selling it at 10 shillings.
Okay, that's a very interesting spread. Eh? So, small-time retail, then that's in your early years in primary, right? Yeah. So maybe in campus, I know at some point you were more into technology. Yeah. So how was it at that point?
So even before we get to campus, still in primary, towards the end of my primary school, I started doing value addition, where I would buy a Milo and shape it into chocolate bars and then sell it as chocolate. So that was my foray into value addition.
Yeah.
And then in high school, I also did a lot of arbitrage, a lot of trading. And
like Forex or?
No.
Okay.
So this was trading bread.
Okay. Still commodities.
And lollipops, yes, commodities as well. And then I really got into technology in high school. Actually, all my life I've been into computers. But in high school then I got into databases and creating value through using data. And immediately I left high school. I kept focusing on that. Yeah.
So high school then is when you started now more on the technology side.
Correct.
And would you say was the entrepreneurial thing that, was it something your parents were encouraging you, or it's something you is your lived experience, you saw it around you, or how was it that it came so naturally for you?
So what came naturally for me was problem solving and especially improving the quality of life for people. But both of my parents were also entrepreneurs. And after school, we would go to their businesses and work to be able to earn money to enjoy whatever we wanted to during the weekend. So it was a mix of both. And something that I actually think back to is that in school, there's that form where you have to put your father and your mother's occupation. and they'd tell me, right, businessman. And I'd ask, but what does a businessman do?
It's so general.
Exactly.
Yeah.
So he would tell me that they wake up to solve problems and they get paid to do that. So I guess later on in life is when I came to understand that this is what business is.
So I would say like it's a blend of both nurture and nature, right?
Correct.
So in terms of your journey, and probably your what were some of the early successes, maybe from now when you ventured into databases or other technologies? Did you sell the business? Did you, or sort of pivot them away, or how was your sort of learnings and also successes from those ventures?
So actually, when we grew up, we were a little bit well off. And then both my parents got into quite some financial problems. And it got to a point where we were forced to fend for ourselves. So in primary...
As all the kids in the family.
Exactly.
Okay.
So in primary school, I would go to school with just the bare minimum. And it was up to me to figure out how to cover the rest.
Yeah.
So that's how I started entrepreneurship. So some early successes...
So out of necessity.
Also out of necessity, yeah.
Okay.
So some early successes were me being able to cover my costs and me being independent and living the quality of life that I chose. In high school, I was selected. I got very high in the science festival, the national science competitions.
Yeah.
And we had an idea around a cloud-based idea and databases. And after that, then in university, I went on to actually do some finance and some other things, and also trading, and so many businesses and failures, and now I'm here.
Okay, yeah. So I think from the way I understood it is, there's a bit of necessity that sort of pushed you into this space, and then there's the aspect of survival, right? So and that sort of naturally teaches you how to put your costs down as a business and all that. Maybe also now shifting to Ebikes, which is your current venture. How was the idea? How did the idea start in terms of this is what I want to do? Because a lot of people ask, how do I know what problem do I need to attack? How was it for you?
Ebikes is a culmination of a lifetime of experiences.
Yeah.
And in all of the things that I've done, it's always come out of a problem that I faced personally, that I noticed that other people face too. And also part of being an entrepreneur is not always accepting the status quo and understanding that if you want something to change, then you might as well do it yourself. So in 2018, I used to work in the lands ministry. I was working in Kwale, and my transport costs were very expensive. I lived only 10 kilometers from work, and it used to take 3 hours every day, and it used to cost me 500 shillings every day. So also when friends came to visit and family, they're always stuck in the house, and they'd be forced to go to the same old tourist traps. And usually they can't visit the hidden gems that are really beautiful at the coast. So I was looking for a solution for me, something lightweight, affordable, something that doesn't need a third-party charging station. It should be able to fit in the house because at the coast there's no fences. And the thing that ticked all of these boxes was an electric bicycle. So I looked for one from 2018 all the way up to 2022. And finally, I did find one. And this guy said, I'll sell you this bike, and once you pay, we do a handshake here, and if anything breaks, you don't call me, don't look for me. You go to China on your own.
Yeah.
So I thought there must be a solution that is African, that's Kenyan made, a solution that caters to the mass population.
So that was 2022.
Correct, 4 years later.
And so at that time there were no locally assembled electric bikes.
No.
Okay. Wow.
Yeah. So at the time I did some research. I reached out to all of the people in Nairobi, in Kenya, who are building electric bicycles. And I saw a need for us to do it by Kenyans for Kenyans. And that's when, in March, I made up the decision to start Ebikes Africa. Yeah.
Wow. So it was a personal pain point. Because I think in Africa, for those who are not aware, the last mile is where there are a lot of you probably pay the most because there's no reliable public transport, and then there's a lot of inconsistency in terms of do you use borders, do you use matatus, do you use Ubers, and it's there's a huge variance, and also depending where you are in terms of your affordability, it can be quite inconveniencing.
Actually, after starting Ebikes, later I came to learn some very worrying statistics. So in Africa, only 4% of people own cars, own vehicles.
And the way there are so many traffic jams.
Yes. So that 4% includes tractors, trailers,
stuff that
tuk-tuks,
just
motorbikes.
Yeah,
correct.
Yeah.
So most of the vehicles out here are owned by the same people. Another thing is we face some of the worst traffic in the world. So in Nairobi, for example, it's 60% worse than the global average.
Yeah.
Yet
60% more than the global average.
Yes.
Okay, wow.
Yet people don't own vehicles. Actually, the statistic for Kenya, in Kenya, only 2% of people drive to work.
Wow. And I also heard 60% of Nairobians walk to work.
It's actually 73.
73, wow.
So
we're almost like solving mobility sort of in an upside down. Like we are always building roads for vehicles, and paving roads and building highways, which is not bad investment, but it's catering to a very small segment of the population.
Exactly. And it's also not very effective. So this, although we say mobility, at Ebikes, we see it as access to opportunities is a problem we are trying to solve. Access to better education, access to better paying jobs, and to different markets. So a lot of people are stuck in loops of poverty where you go from home to work, the shortest, straightest route, and back, the shortest, straightest route. And this person has a chips place on the side, their local maybe, a nyama place, and that's their whole life. And they do that route for an entire year, then they go for holiday. And even when they do go for holiday, they're stuck in hotels where they also still can't access transport. So a lot of Nairobians are stuck drinking in hotels. And you come back from the vacation tired than you went.
Yeah.
So a lot of, even at the coast, fishermen, there's a path directly from his door to the ocean. And he spends 8 hours in there. And he comes out exhausted. And he has to walk back home. And he sells the fish along the route at a throwaway price. So it's access to the dignity of being able to choose and access opportunities.
You've also mentioned I think I like the way you've framed it as you're not just doing mobility, you're giving access to opportunities. Because when you look at it that way, then what we call investors call term or total addressable market is much wider, right? Because someone could be buying your products for going to school, someone is work, someone is logistics or delivery, someone is for recreational reasons, someone is for fitness, maybe they just want to, or for their own well-being, they want to use it for part of their workout routine. So I think if you frame it in terms of opportunities, the opportunity could be education, jobs, leisure, or otherwise.
For some perspective, in America, 85% of people own cars.
85%.
Correct.
Wow.
So,
and here it's 4% Africa.
Exactly.
So there's an 81% delta.
Exactly.
Okay.
So, and we're also going to be the most populous continent in a few years.
Yeah. And we are rapidly urbanizing without the, urban planning, infrastructure, and sort of thoughtful kind of growth that is needed.
So even if we were to double the vehicle density, then where would these people put their vehicles? There's not enough space. And the roads are built extremely small. And urbanization is happening faster than infrastructure. So we are banking on lightweight, affordable vehicles, electric bicycles, being the next most common mode of transport in Africa. Back in 2002, our president, the late Kibaki, in his campaign promises, he said that he was going to provide 200,000 jobs. And people thought this guy is crazy. And his answer to that was zero rating tax on motorbikes. And that brought a lot of two-wheelers into the country. It created jobs for the youth and spurred economic development. And so many other African countries then followed suit. So we are now at that place where we were in 2002, where now electric bicycles are tax exempt, and they're providing jobs for so many youth who would have otherwise just been wasting away in their homes.
Maybe a question on that idea of now, this thing is available for, if you zero rate, the price point goes down, more people can afford. But unlike, say, I visited Netherlands, I think last year, and biking is ubiquitous. It's sort of embedded in their culture, and even the way they do infrastructure. And they have bike lanes. It's very you could easily see a 70-year-old grandma doing it, right? So in terms of safety, and in terms of solving around things maybe the government has not yet looked at, other than the fiscal tax benefits. How do you go about it as a business? Because I'm sure that's a question you get asked.
Yes, quite a lot. So hope is not lost. Denmark got there. In 1995, it was a car-driven society. And they've gotten there in less than 30 years. Right now, it's ubiquitous, like you said.
So you're saying there is evidence that a culture can sort of shift from car dependence to walking or riding bicycles.
Exactly.
Wow.
The thing about space is it's limited. The Earth only has a fixed surface area. And our roads and their reserves are fixed as well, especially considering the development is happening already. So the chances of the government bulldozing down flats and office blocks is very low. But we are seeing...
And also not popular politically.
Exactly. And extremely expensive. So we are seeing societies like... we are seeing Paris change the entire society simply by closing roads off to vehicles. And it's really improved the cycling culture there. So
now you can have public policy and say Ngong Road is a cycling road, for example.
The space taken by one bus. So first of all, most of the cars in Nairobi have one or two occupants. And that space can be taken by around 8 to 10 bicycles. So, and a bus carries 35 people. There's a really nice picture that I'll share with you after this. The space taken up by a bus can be taken up by over 40 bicycles. So I see very soon...
For the same surface area, the bicycle, the bus is occupying.
Exactly.
Okay.
So very soon, I see the government closing roads for cyclists, just lanes. Also, the government, there have been many development agencies and partners who've played a huge role in improving the cycling infrastructure in Kenya. So one of those is UNEP. They have the Share the Road initiative. And this has brought about cycling lanes all over Nairobi. Right now, when the county government does any sort of roadwork, they cover the cost of doing the cycling lanes and non-motorized transport lanes. We're also seeing JICA, who, for example, have set up cycling lanes on the whole of Ngong Road. And these initiatives have been so successful that they're being replicated in 9 other African cities. Right now, there's an express...
Wow, so even Kenya is being used as a model on how to do it.
Exactly.
Yeah. And are you seeing the trend in now, we have, second-tier cities in Kenya, right? Mombasa, Kisumu. Are you seeing that adoption? Because them, at least, you could say there are some, counties, they have not yet done, high rises that would make it difficult to navigate policy around transportation. So they are starting almost from an open plate. Are you seeing that shift, or they are still not yet there?
So the good thing about satellite cities is vehicle density is quite low, but these people still have the same demands as urban areas. They still want to grow, to go to school, to access jobs and markets.
There are a lot of aspirational goals similar to a big city like Nairobi.
Exactly.
Yeah.
So, but the roads there have less pressure. So we actually see the biggest impact from mobility happening in these satellite towns. Yes.
Interesting. And then now you've really, you've won me on the market size, the problem, thinking of it, reframing it as not only mobility, but more of livelihoods and opportunity. Now, nuts and bolts. Day one, how do you start product, knowing, this metal, this thing, this component, where do I source? How do I assemble? How do I price? etc. So, now the building of the business, how was it for you?
So, brick by brick.
Yeah.
Nut and bolt. So, a lot of failures.
Yeah.
It starts with trial and error. Picking up different bicycles from so many manufacturers and seeing what works on this and what doesn't.
So, looking at what's there and testing it on our Kenyan roads, and then knowing, okay, this works, this part works, this one doesn't work. This is too expensive. Yeah. Okay.
And also building for scale. So the biggest issue is cost, especially in a capital intensive business. So ordering stuff in bulk makes a big difference. And building with that mindset from the beginning. Something I've got to say, I think we're going to get there, is the bicycle culture in Kenya is also quite an issue. So although electric bicycles are new here, in places like China, China produces around, right now, last year they did 40 million.
40 million
electric bicycles.
Was that for exports or for their own?
That's both.
Both, okay, both for export. But I can imagine a huge chunk also is consumed locally.
Correct.
Okay.
And the year before, they did 36 million.
Wow.
And
so that's like almost 10% annual growth.
Yes.
Okay.
The year before, they did 33.
Wow.
And before that, 30. So the impact of electric bicycles is huge. And the cost of entry is extremely low.
Yeah.
The bikes cost less than a third of what an electric motorcycle costs. And it uses very little material. One bike, for example, one Tesla could make 55 electric bicycles. So,
there's the economies of scale.
Yes.
And then my question on building, you're saying the culture, we've not yet embraced bicycle culture as a people or as a community. So how do you get talent? How do you convince a sales guy, an accountant, to leave I don't want to mention names, company X doing vehicle assembly or someone doing credit for electric motorbikes to join now e-bikes. Yeah. So how do you do team building, assembling of the team? I know you have, I think you're more than 15 now.
Yeah.
So it's quite a good number. How did you get there?
So, first of all, let's talk about culture.
Yeah.
And then now growing the team.
Yeah.
The idea, we said we're going to focus on electric bikes in 2022. We were officially registered in 2023. So we sold our first bike in October 2023. After 1 year and 9 months.
So that's locally your own now IP.
Yes.
Wow.
So we spent from when we started building the team, we started building the team in 23. It took us 9 months to sell one bike.
Wow.
And that 9 months involved us going all over the country, talking to thousands of people, visiting companies and doing activations. And we'd get the same question, buy Scaly, 100K. And people
could not fathom the price point.
Exactly.
Wow. Yeah.
And people would also in Africa, people equate bicycles to poverty.
Yeah.
So public education has been a huge, huge job and awareness. And finding a team that is dedicated to this has also been extremely difficult. So our success when it comes to team building has been with people who are looking for a better future for Africa.
So mission aligned employees and stuff. Yeah,
exactly. Yeah. And people who have also gone through the same problems that we are trying to fix. Yeah.
You have a co-founder.
Yes, I do.
Yeah. So how, maybe now, other than the staff, hiring, co-founder dynamics, how did you find each other? Because also it's not very easy to find co-founders that are aligned. There are a lot of stories out there.
Yeah.
How did you find each other, and how was the journey in terms of growing as partners? Yeah.
So me and my co-founder had we had done another startup together.
Prior Ebikes. Yeah.
We had a startup in the Web3 space, and it was around democratizing access to royalties and communities for artists making music and other forms of art. And we failed spectacularly. This was in...
I like your choice of words. Yes. It means it was...
We put in the work.
Yeah,
we did everything right.
Yeah.
But unfortunately, it was an idea that wasn't ready for its time.
Yeah.
This was in, I think, 2021 and early 2022.
Yeah.
So we kept in touch. We were good friends. And as the idea evolved for Ebikes, I kept him in the loop. And after 1 year of doing R&D, then in 2023, I reached out to him and said, hey, I think I've got something here. This is the progress we've done. And I remember it was our 4-hour conversation. And I was there excited and asked him, so what do you think? Are you going to join? And he told me I need to think about it.
Yeah.
So I went home and I waited for day 1, day 2, day 3.
Yeah.
And 10 days later, guy...
you're counting. Yeah.
This guy finally calls back and he's like, you know what, let's give it a shot.
Yeah.
So as much as the friendship was there, it has been extremely difficult. This is a relationship like any other. And
you have to put work.
You put the work in. Yeah. You have to grow both of yourselves independently and also as a team. And there's aspects of honesty, communication. There's so many dynamics at play that you have got to keep working on it. But I've got to say that a co-founder is one of the most important things in a business. And the dynamics will work themselves out. You guys just make sure you're aligned on the vision. Make sure you're aligned on the common decencies of being honest with one another and having an open communication.
Yeah. And then you've mentioned, I think I like the fact that you are keeping in touch even when you are doing R&D. So someone at least understands, okay, this is something you're working on. And also you have history. So I guess, there are many people who could have pitched the idea, but you chose him. So so very, very insightful. Maybe a question now on the business model of Ebikes. 100,000, that's the price point. But I know you've embedded a lot of other auxiliary business. I think I know there's fleet management, which is sort of a licensed kind of package. There's, I think, spare parts, there's maintenance, there's cash offers, there's on credit. Maybe explain how it all blends together because from an outsider it can look like it's a lot. Yeah.
So when we began, we thought people need transport. We are going to give an affordable mode. It's effective. And we're going to be, overwhelmed with orders once we open the doors.
Yeah.
And we opened doors and there were crickets there.
Yeah. That's the only noise.
Yes.
Yeah.
So we started where we were only selling bikes.
Yeah.
And after 1 year of doing that, we noticed that there's also a huge need in logistics. So logistic costs in Africa are also some of the most expensive in the world. when you order something worth 1,000, it costs around 400 to get to you. On average, it's 40% the cost of traded goods. And then on top of that, businesses have a list of like 10 bodagas who they call from the most reliable to the least reliable. And you give a bodaga your things, then he disappears, he goes have lunch, visits his family, and then goes to his doctor. After all that, he delivers. So businesses lose another 15% due to inefficiencies. And a lot of times when businesses get over, say, 10 to 20 orders, they tell customers, we're no longer delivering today. Now we deliver on Saturday and Monday. So after 1 year of Ebikes, we in 2024, we started our delivery fleet. And we did that for a year. Actually,
so now this is you taking orders, and the fleet is in-house, your riders are in-house.
Exactly.
More now like as a logistics aspect to your business.
Exactly.
If that wasn't complex.
Yes. So we are using the bike as a platform for this logistics business. We also found that our first customers were delivery riders because they get immediate return on investment. But most of these riders, when we took them to microfinance institutions, they'll be asked for a 3-year bank statement, work contract, where does your mother and your father and your grandma live?
WIBA, insurance,
yes. And at the end of this, they'll be told you took a 500 bob loan on Mshwari in 2018.
We can't advance credit.
Yes. So we needed a way to give riders a shot. So that worked very well with our logistics service. We did this we started in March last year, 2024. And then after 1 month, we had grown to around 3 riders. And we quickly noticed that we're going to go nuts with the phone calls and the headache of managing riders. So in April last year, we started building a fleet management system. To manage our fleet and also the fleets of other logistics companies.
So you started it for your own, solving your own problem.
Yes.
Okay, interesting.
So we built that. We built the system. We piloted it from September last year, 2024. And we saw a huge market gap and opportunity because a lot of logistics companies hit a glass ceiling after which they couldn't scale. The costs of running fleet management systems became extremely expensive. And also businesses weren't able to scale because they needed to hire riders, manage vehicles, find mechanics, and they were losing a lot of money. So our third business model is we build fleet management systems where a business doesn't need to download an app or be tech savvy. Our management system uses WhatsApp. They ask the customer to send a PIN. It's forwarded to us through WhatsApp. And riders are assigned and managed all through WhatsApp. Yes.
Okay, interesting. Wow. And then how has it been now since introducing all these business models in terms of customer awareness? Because I would imagine I could come thinking I want to do fleet management service, but I could be converted to now purchasing my own e-bikes from you. Are you what are you seeing in terms of the evolution of the customer journey, profile, and awareness?
So 2023, that entire year, I think we sold 5 bikes.
From the one you sold
in October.
In October, okay.
In October, even the guy at the shop, he was like, a customer's walked in and they want to buy a bike. What do I do? and we were like, sell. Give them the till number. So that year we sold 5 bikes. The next year, we ended up selling, I think, over 25 bikes. And we had a fleet we started with 1 rider in March, and by the end of the year, we had 6. That year, we did 2,100 deliveries. And now this year, we have put on the road over 100 and nearly 130 bikes.
Just in 6 months?
Yes.
In under 6 months?
Actually, in the first 5 months.
5 months, yeah.
So on top of that, On top of the
So more
other
than
bikes.
5x growth.
Exactly.
Yeah, in 6 months compared to a whole year.
Those are numbers until May.
Yeah.
So in just 5 months.
Yeah.
And in January and February, we did more deliveries than the whole of last year.
Mm.
In March, we did more deliveries than those two combined. And in April, we grew by, I think, 50%. And in May, we did more deliveries and revenue than the whole of Q1 combined. So
there's clear product market fit.
Yes.
Yeah.
One thing we really worked on at Ebikes is getting the business model right first. So we have other people in the space, and we saw what growth at all costs looked like, and the amount of loss and the amount of mistakes that were made. And we chose to learn from other people's mistakes. So we spent an entire year building our fleet management system so that when we do scale, we do it right. And now we're at a place where we have more demand than we can even cater for.
And then obviously now you have, a good and bad problem. The good problem is you have, orders increasing. The bad is telling customers wait or no because of working capital, right? Or, the ability to fulfill. So maybe talk us how you've approached fundraising. I know you've been backed before. How did you go about fundraising? And also how you're thinking of, the landscape has changed, right? So, we've seen the cooling of valuations, VCs retreating. How has that shaped, say, for example, efficiency, cost cutting? How are you looking at it in terms of internal resources and also external?
So maybe a word to all the Africans out there and every entrepreneur, wherever you are. Start fast. Capital will always be a problem. And the team you'll always need things.
You'll always need more resources than you have. So
the answer is, first of all, start. And then the best investor in your business is you. So first of all, we put up quite a lot of money. Our savings, our earnings from other places, we invested all of that into Ebikes before we then got an angel investor. So, of course, there's the family, friends, and fools.
The 3 Fs.
Yes. We were able to get a small investment from one of our friends. And also we've gotten some investment from our family members. Very little, I think around maybe $10,000 to $15,000. We put in around over 50,000, 60,000. And
so basically more like under 100K.
Exactly. And after that, then after proving we had something here, we then started approaching people to invest in us. It was very difficult. The amount of times I've had, unfortunately, it's quite a lot.
It's another full-time job.
Yes, fundraising is a full-time job. And I'd say start by talking to your suppliers because you have costs that you're trying to cover. And these people understand the business that you're in. And they want you to succeed as much as you are trying to succeed because you're a customer to them. So we actually did get some debt and some equity financing from one of our major suppliers. And that has helped us also grow. Right now we are raising a seed round from institutional investors. And this is now to scale our operations across the Kenyan market.
So I think we'll put your contacts and also your story out there for one, for investors. Please invest, both local and foreign. And then number 2, I think you've mentioned the important thing of supplier credit. And as an entrepreneur, you always want to know who is out there. So maybe there could be other partners around the supply chain that could want to connect with you. And maybe a question on growth. Now that you've mentioned that, how are you thinking about it? You mentioned earlier the 9 cities that are copying Kenya. Is that how you look at it from the lens of, what's changing culturally from other markets? Are those markets, or are you looking at affordability or other things that you need to see in the ecosystem for you to say, okay, before I go to Uganda or DRC or Nigeria, this is what I want to see. So how are you looking at growth?
So right now, as much as we started as an electric bicycle company, our main product now is fleet management systems. And our fleet management system is called Beba AI. So with our fleet now, we are focusing first on Kenya to get it right before we scale. So get it right in our primary market. And right now we have orders worth over $700,000 that with contracts signed that we're about to fulfill. And our fleet management system will get us to a couple of $1 million within the next 24 months. And this will help us to serve so many customers in the e-bike space, other electric bicycle companies, electric motorbike companies, all over Africa. So in terms of scaling geographically, we are looking at countries with good e-mobility policies and incentives.
Because of if it's VAT exemptions, duty exemptions, that could help in terms of pricing.
Exactly.
Yeah.
So it's a very tough market. If you can get it right in Africa, you can get it right anywhere else. So also it's a new product and the people are very cost conscious. So we're giving them something that's efficient, effective, and at 60% the cost. So we're looking for markets that are friendly to mobility, markets that are looking for growth. And initially, we're going to focus on the East African region. And we have our eyes trained on 2 markets now, which is Ethiopia and Rwanda at the moment. Yeah.
Okay, so in friendly mobility policies and opportunities where you could partner.
Yeah.
Maybe a question on growth.
Yeah.
You said you learned from growth at all costs. That philosophy.
Yeah.
What would you say is the learnings that you're taking as you grow, hopefully in a healthy kind of sustainable way?
If it doesn't work with one, it won't work with 1,000.
Yeah.
Your business model needs to be correct from the onset.
Yeah.
And if you scale sustainably from the beginning, then there's nothing that's going to pull you back.
Yeah.
And the avenues for growth later on are even more.
Yeah.
And the risk of existential failure is much less. So getting the business model right from the beginning is extremely important. Yeah.
Interesting. So get it right from the word go. I think you've nailed Kenya, at least from how I've seen it.
Yeah.
And then lastly, maybe last 2 questions. One is, AI is here. So how do you see, a lot of people look at AI from the, banking or credit or, blockchain or, e-commerce.
Yeah.
Is there an AI opportunity for, CapEx heavy businesses like yourselves?
Yeah.
What are you seeing in that regard?
So again, we started as a CapEx heavy business, but now we have pivoted into a tech business where the vehicle is just a platform to get people onto our service. So how we use AI, another opportunity we saw and learned later is that e-commerce in Africa, in Kenya, doubles every 3 years.
Oh, really?
Yes.
Wow.
So more and more people are ordering from home because, again, they can't access transport. So we built a system where when a business gets a location, they send it to our WhatsApp number. It turns, so maybe the business says pick up from town, drop off at junction. It turns that into coordinates. It assigns it to the nearest rider, and it manages the communication between the customer, the rider, the shop owner, and the branch manager. So when the rider gets to the shop and he says, I've arrived, it updates the relevant people.
And how does it go through because a lot of small convenience stores use WhatsApp
exactly
is that sort of the
exactly
the channel? Okay.
So here a shop is not being told to download a new app. There's no learning curve. It's simply come as you are, and in whatever language you're operating in. So the shop owner could write us in Swahili, chukua hii kitu kwa duka ya Moi Avenue.
Take these things from
the Moi Avenue
store. Yeah.
And it'll go online.
Yeah.
It'll take that text, the conversational message. It'll figure out, what did this person mean by Moi Avenue? Turn that into coordinates. And then I'll assign the rider. And
so you even in your conversation,
yes,
you might not even tell the rider where to get specific shop. You could give it could give options in terms of where to source.
So yes, a business owner can have multiple branches, and just by sending us WhatsApp messages, our AI system figures out what they mean by a specific branch and what that location is. As long as one rider goes there, it's then added to a database and assigned to the shop. And also the customer could speak in French and the rider could speak in Kikamba, a local African
and then there's like
language.
Some translation.
It would do the translation.
In between. Okay.
Also here, business owners don't need to be in touch with the customers all the time. So customers' complaints, customers' issues are raised to the relevant person. Not everything has to go to the business owner. So for example, if a rider accepts an order and within 15 minutes they haven't picked it up, only then is our fleet operations team notified. So a business owner now is able to scale without changing any of their systems, but they get the same quality of service. If you need one rider, you get one. If you need 10, you get 10. And all of these riders have world-class training, and we give them weekly retrainer courses. So you're operating your mom and pop shop in town or in downtown, but you're getting the same quality of service as Uber is and the big
and Java
players.
and all these. Yeah.
So we can manage a fleet of 100 riders with just 2 people. And the more riders we get, even the better economies of scale become. And our fleet management system allows shop owners, even if they're using an SMS phone, to talk to riders. And a shop owner can ask our system, how many of my customers came from Westlands? How many of them ordered between 10 and 12 p.m.? What does my demand look like on a Sunday?
A question on fleet management. How do you limit? There are limits on the quantum of cargo you can do on an electric bicycle. So are there certain mom and pop shops or businesses that you target? Is it sort of lightweight delivery? Or is it certain distant limits you're working on? What are the boundaries in terms of target customers?
So fun thing about Nairobi, 90% of deliveries done are below 5 kgs.
I like the way you always turn me to your to data. So 90% of deliveries are under 5 kgs.
Yes.
So this could be a phone, a laptop, a letter, shoes, anything. Okay.
So gone are the days where you order a burger and fries and it's delivered on a 100-kilo motorbike. Like, what's the point?
So that's a lot of fuel, pollution, noise, just for a very small...
So our riders on electric bicycles, they're able to access so many parts of the city that motorbikes aren't. They also take up very little space in parking bays. And the cost of maintaining this bike is extremely low. So, for example, our bikes do 80 kilometers using electricity worth 12 shillings. That's 1 cent in dollars. So his trip to you is costing him around a shilling. And this person, we're able now to save the business up to 40% of their cost. If it initially cost you 400 for that delivery.
Because that you mostly are loaded into the price of to the customer.
Exactly.
Right?
So businesses are able to give their customers lower cost, and our bikes are as efficient as motorbikes in urban areas. Now, we have also piloted with electric motorbikes, and that's why we're Ebikes Africa. And our system, our AI system, Bed by AI, is able to look at different factors before it assigns to a specific rider. So it factors in, for example, the distance, the weight of the package, and other factors. And then it says this order needs to be assigned to a motorbike rider, an electric motorbike rider, or this will be assigned to an electric bicycle rider.
Okay. So there's like an if and kind of approach in your...
Correct.
Okay. Wow.
Also, fun fact, riders using our system, our fleet riders even, 3.5, actually, one of our riders replaces 3.5 independent delivery riders. We are that effective. Yes. And, and we are saving the business owner 40%.
Yeah.
And the best part is our riders earn more than motorbike riders.
Really?
Yes. Because they don't have the fuel cost, the maintenance cost.
Yeah, because you could look at earning in terms of your net, your take home or your what remains in your pocket.
Exactly.
Which is the most important thing rather than top line revenue.
So we have riders who come in the morning with their motorbike, they pack it,
and then
they take an electric bicycle and they go to work.
Wow.
One guy was saying, my friends are laughing at me because I'm riding a bicycle, but me and my wallet are laughing at them.
Yeah. Interesting. So very interesting approaches. I think I've learned a lot around your journey, how how you look at problems. I think, a very interesting, striking thing is, you start solving problems that affect you, and then you ask yourself, if it affects me, probably there are others that, they're affected, with the e-bikes in Mombasa. And also now that you did the fleet management, it was an internal problem. Then it became something you support others. And then I think, very insightful data points, I think we'll summarize them for everyone. And I think, the approach in nailing Kenya and, expanding to other countries. So thanks a lot for your time. I think we'll champion your work, and we look forward to engaging further and supporting the ecosystem, in terms of mobility and livelihoods. Yeah.
Also, Dan, thank you for this platform.
Yeah.
You are doing an amazing job highlighting entrepreneurs across Africa.
Yeah.
And I think you should keep on going.
Yeah.
And if there's anyone out there who wants to support this, it's a great platform.
Yeah.
And it's giving voices to the unheard.
Yeah. Thank you, and see you in the next episode.
See you next time. Guys, like, subscribe, and follow. Turn on the notification bell.
Thank you.
Yeah.